hedge fund manager Kyle Bass on China's stock market crash. And in quotes, for those of you who aren't watching, it says, "This is the U.S. financial crisis on steroids." And so let's check out what he has to say. Before we play the video, I'm going to actually read some of the posts. So it says, day 52. I'm not familiar with Yorkshire Trading Academy. I know Samson follows the content, but it says Kyle Bass gained prominence as an investor after successfully predicting the 2008 financial crisis, foreseeing the subprime mortgage collapse and profiting from it. Here he's discussing the latest rout in Chinese stocks. One of China's largest stock indexes in the CSI 1000, which is designed to replicate the performance of the top 1,000 stocks traded in the Shanghai and Shenzhen stock exchanges. It is similar to the Russell 2000 in U.S. markets. Over the last 10 days, the index has crashed 30%. This comes after China's largest property developer, Evergrande, was ordered to be liquidated.
And just for clarity, this is kind of their specialty, which is finding bad debt markets to invest against.
Yeah.
So 2007, they gained 212% on the subprime mortgage meltdown. They also bet on the Greek debt crisis of 2012, made 16%, nothing too fancy there. He started the first Asia focused fund, and the fund after the Japanese yen depreciated 40% from 2012 to 2015. In 2016, he had a knockout with Heyman Capital Master Fund, finishing the year with an estimated 24.83%. And historically, their record has been 25% per year return since 2006, which is pretty incredible.
Yeah, wow.
So he might know a thing or two about what he's talking about.
Whoa, so we got a clip queued up.
Single property developer in China that's public or listed is in default. When the Chinese miracle was running its course, substantial majority of Chinese GDP growth was real estate. And now you're having a reversal after an unregulated and unabated climb in real estate. Now you're seeing a real estate collapse. So this is just like the U.S. financial crisis on steroids. They have 3.5 times more banking leverage than we did going into the crisis. And they've only been at this banking thing for a couple of decades. China is going to get much worse. Every single
Yeah, on the last pod, we were talking specifically about how they're the second largest holder of U.S. Treasury. And so they were taking advantage of the same cheap money.
Yeah.
That everybody else was. However, in a communist society, the government never wants to look weak. And so they will continue to prop it up and just build as if nothing's ever going to go sideways until the market ultimately shifts. And so what he said at the beginning, which was a little bit cut off, but he said every single property developer in China is in default. And they have 3 times as much leverage in their system as we did heading into the 2007, 2008 housing crash, subprime mortgages, where his fund made 212%. And so he is watching that very closely, probably betting against that market, which is interesting because guys like Ray Dalio have come out and said in the past couple of years that China's, running the potential to be the next superpower. I don't ultimately buy it. I think it's a house of cards, and they have a older population, more old people than they do young people. So they have an infrastructure problem, both in their employment as well as in their actual cities themselves. Right. So it'll be interesting to see how it ultimately plays out. It's ultimately good for us, and it's what we've been talking about. Everything is the United States is removing itself from the grander global economy.
Mm-hmm. Dude, and fascinating stuff. Honestly, it's fascinating because, all we hear over here is, our story. But it's just like...
Well, when you talk about it in a vacuum,
right.
Sure. It's just like we were talking about the dollar last week, right? Yes, the people are deleveraging from the dollar, but it still tends to be one of the best houses in a bad neighborhood. And so will it collapse? I don't know. I mean, if we keep printing money the way that we're printing money, for sure. How we unwind it, I have no idea. But in comparison, like everybody's in the same boat. Right. And so if one ship goes down, they all go down. We're probably going to be
the last ship to go down.
The last ship to go down. But who knows, ultimately.
Roger that.